Hello and welcome to my channel. My name is Jake Kuzno and this is HTA Personal Finance. So before we get to the video, I want to plug and advertise my new book, How to Adult Personal Finance. So if you've been watching any of these videos and you find them helpful and you want to learn more, I strongly suggest using this as a resource. You could purchase it on Amazon. It covers these topics and many more. Again, that is How to Adult Personal Finance for the Real World. Thank you and enjoy the video. All right, welcome back to How to Adult Personal Finance. Today's video is going to discuss the thrilling topic of taxes. Now, this video is not going to teach you how to file your taxes, but it will help you understand taxes. The key terms for today are going to be the progressive tax system. We're going to talk about the standard deduction. We're going to talk about tax rates, and we're going to talk about your effective tax rate. All right, so first, let's try and understand how taxes are paid. Now, typically for most people who are not self-employed, so if you work for somebody else and you get a regular paycheck, your money is going to be taken out of your paycheck and given straight to the IRS. So you don't have to actively, maybe like every month or something, fill out like a form or pay online to the IRS. For most people, it's going to be taken out of your paycheck. Now, this video is going to focus on your federal income tax. And your federal income tax is the tax money that is taken out of your paycheck and given straight to the federal or national government. If you live in a state that does have state income tax, which is most states, I'm not going to be discussing that today, but just understand that it functions in the same way that the federal income tax works. Okay, the first key term for today is deduction. Now, deduction means that you get to deduct some of the money from your salary and not have to pay any taxes on it. Now, this is fantastic because it's just more money in your pocket. Now, there are two ways you can deduct money from your salary. The first way is called the standard deduction. The standard deduction is just the set amount of money that you can choose to deduct. This year, or for the year 2020, the standard deduction is $12,400. So if you choose the standard deduction, it means you get to deduct $12,400 from your taxable income. The other option you can choose is an itemized list of all the things you spend money on throughout the year that you shouldn't have to pay taxes on because they help contribute to the money that you earn. This is a bit more tedious, and to be honest, most people are going to choose standard deduction, and standard deduction typically is going to end up saving you more money than the itemized list. Now, with the standard deduction, if it's $12,400, let me demonstrate a little bit more. I'll highlight how it works. So if you have a salary of $50,000, and if you choose the standard deduction, it means you get to deduct $12,400 from your $50,000 salary. This will leave you with $37,600. This is called your taxable income. So you don't need to pay taxes on the entire $50,000. You only pay taxes on the $37,600. Next, we're going to talk about the progressive tax system. The United States uses a progressive tax system, which just means that your money, as you start to make more money, it's not taxed at a single rate. That is a very common misconception that people have. Your money is going to be taxed at different rates. So let's take a look right here. We've got the 2020 tax brackets for single filers. So as you can see on the left, there's the federal tax rates. There's 10%, 12%, 22%, 24%. So what this means is as you make more money, so let's just go, for example, with if you have $50,000, if you have a taxable income of $50,000, that is going to put you into the third tax rate, that is 22%. But what you do not do is just take your $50,000 taxable income and multiply it by 22% to find how much money you owe to the federal government. That is not how it works. In fact, if you make $50,000 or if your taxable income is $50,000, you will be taxed at three rates. You'll be taxed at 10%, you'll be taxed at 12%, and you'll be taxed at 22%. Now this is great because if you take the average of these, it's going to be much lower than what you think of 22%. So I think the most common perception of taxes would be, all right, you just take the $50,000 of your taxable income, multiply it by your single rate, and that's it. Again, that is not how it works. And because that is not how it works, what's most important is some people believe that there are situations where if you were to get a raise, it would put you into a higher tax bracket, and because you are in the higher tax bracket, you will end up making less money. That is not how it works. That is not how it works at all. So if you are ever offered a raise, never refuse it because you will not end up making less money. In this next section, we're going to show you an example to see how this works. Now let's take a look at this figure. So at first glance, this might be a little bit confusing, but we're going to walk through it step by step. So this figure demonstrates how your money would be taxed if you had a taxable income of $90,000. So let's go through this. So in the left column, we've got the 2020 tax brackets. So you got three numbers there. You got 85,525, 40,125, 9,875. So those just show that those are the different rates that you're going to be taxed at. Once you make more than $9,875, you're going to be taxed at a higher rate. Once you make more than $40,125, you're going to be taxed at a higher rate. So the second column, so basically the actual bar chart here, you've got 4 categories. And each of those categories represent the amount of money that you will pay in each tax bracket. So that $4,475 on top, what that represents is the amount of your salary that will be taxed at 24%. Now the $45,400, that is the amount of money that will be taxed at 22%. So as you can see, even though your salary or your taxable income puts you in the 24% bracket, very little of your money is actually taxed at that tax rate. For instance, only $4,475. And if you notice, more of your salary is actually taxed at 10% than it is at 24%. And lastly, the numbers on the far right, they represent the amount of taxes that you've actually paid in each category. So if you add all those up, that number on the bottom is $15,680. So that is how much you would owe if your taxable income was $90,000. Now this is important because $15,680, this is actually much lower than 24%. That's actually only 17.4%. So the amount you've paid in your taxes is only 17.4% of your taxable income. Again, much lower than 24%. Also, this number is called your effective tax rate. It means how much you are actually paying in taxes on your income. All right, so let's recap. Remember, the first thing to remember is that your entire salary is not taxed. You get to claim a deduction. If you choose the standard deduction, at least for the year 2020, is $12,400. It's also important to note that it's not always going to be $12,400. It could be only $7,000 one year. It really depends on the government and the policies of the administration that's sort of in charge. Additionally, don't forget about the progressive tax rate. This means your money is not taxed at a single rate. This is the biggest misconception I hear from people. Again, as you make more money, you'll be taxed at a higher rate, but your salary is not taxed at one single rate. And the last term was effective tax rate. This is the percent of money you actually pay in taxes. It's not going to be a perfect number, usually like 24%, and the number will be lower than whatever tax bracket you are in. There will be another video that I make that actually teaches you how to file your taxes and how taxes are paid throughout the year. But for now, this is just a foundational understanding of taxes. So please let me know if you have any questions. Send me an email, send me a comment. Thanks for watching. All right, now like every other shameless YouTube video out there, please, if you enjoyed this video, please hit like, please subscribe. And most importantly, if you have any additional questions, please leave them in the comment section here or on my website at htapersonalfinance.com. Thanks for watching.